I want to talk to you about patience, not the kind that sounds noble in books or quotes, but the kind that hurts a little in real time, the kind that feels like you're doing nothing while everyone else looks busy making money, because that's the patience that actually matters in trading. After living through the dot-com mania, the 2008 collapse, and the chaos of COVID, I can tell you this with complete honesty. Impatience has destroyed more accounts than bad analysis ever did. Bad analysis can be corrected. Impatience usually shows up right when you know better and choose to ignore it. The market doesn't punish ignorance as harshly as it punishes people who rush when they're uncomfortable sitting still. When I was younger, I believed activity equaled intelligence. If I wasn't trading, I felt like I was falling behind. During the late 90s, the screens were always green, opportunities seemed endless, and sitting on cash felt like admitting you didn't understand the future. That was my first misunderstanding of patience. I thought patience meant waiting for price to move in my direction after I entered. In reality, real patience begins before you ever touch the trade button. It's the patience to wait for conditions that actually justify risk, not the ones that simply excite you. The market has a way of making waiting feel like weakness. Every tick, every headline, every alert whispers that something is happening right now, and you should be part of it. That pressure is not accidental. Markets are designed to reward those who provide liquidity at the wrong time, and impatience is how they recruit it. When you feel restless, bored, or anxious to participate, that's rarely a signal of opportunity. It's usually a signal that you are emotionally disconnected from your process, and when process fades, patience goes with it. One of the hardest lessons I learned came in 2008. The market was collapsing. Fear was everywhere, and prices looked cheap every single day. I kept buying too early because I wanted to be brave to prove I could see value where others were afraid. What I didn't understand yet was that patience in a bear market isn't about courage. It's about humility. It's about accepting that you don't need to catch the bottom to build wealth. You need to survive long enough for trends to reestablish and clarity to return. Every early entry I took was an attempt to escape the discomfort of waiting, and the market charged me tuition for that mistake again and again. Patience is closely tied to time frames, and this is where many traders confuse themselves. They analyze long-term charts, but trade on short-term emotions. They say they're investors, but react like scalpers when price wiggles against them. True patience means aligning your behavior with your chosen time frame. If you're trading short-term patience, means waiting for precise setups and accepting frequent small losses. If you're investing long-term patience, means tolerating volatility without constantly interfering. Impatience shows up when those two worlds collide, and you start managing long-term ideas with short-term fear. There's also a quieter form of impatience that doesn't get talked about enough, the need for validation. You enter a trade and immediately want it to work so you can feel right. When price goes sideways, that silence feels unbearable. You check the chart too often, look for confirming opinions, tweak your thesis. This is not analysis, it's emotional negotiation. Patience in this context is the ability to let uncertainty exist without trying to resolve it prematurely. Markets move in their own time, not according to your need for reassurance. During the COVID crash, I watched a new generation of traders experience extreme volatility for the first time. Many of them made fast money on the way down and the way up, and some of them believed speed was the lesson. What they didn't see was how fragile that success was. When volatility compresses and opportunities become less obvious, impatience turns aggressive. Overtrading increases. Risk creeps up. Rules bend. Patience isn't just about waiting longer. It's about knowing when conditions no longer justify frequent action and having the restraint to reduce activity without feeling like you're losing your edge. One of the most powerful shifts I ever made was redefining patience as an active skill rather than a passive one. Waiting is not doing nothing. Waiting is observing, filtering, rejecting. It's saying no repeatedly until something earns your yes. That mindset changed everything for me. Instead of asking, "How can I make money today?" I started asking, "Is there anything today that deserves my capital?" Most days, the honest answer was no. And that was liberating because it removed the pressure to force trades out of boredom or expectation. Impatience often disguises itself as ambition. You want results now because you're motivated, because you care. But markets don't reward desire. They reward alignment. Alignment between risk and reward, between timing and structure, between your emotional state and the decision you're making. Patience is what allows that alignment to form. Without it, you're constantly acting a few steps ahead of reality, and the market has a brutal way of pulling you back into sync through losses. Another hard truth: patience feels hardest, right before it pays off. This is why so many people miss the best part of a move. They wait, they do the work, they identify the setup, and then they quit right before execution, because the waiting itself has exhausted them. I've seen this pattern more times than I can count. The mind gets tired of anticipation and seeks relief, even if that relief comes in the form of walking away too early or chasing something else. Mastering patience means learning to sit with that tension without flinching. You also need to understand that patience compounds. Every time you choose not to act impulsively, you reinforce trust in yourself. That trust makes the next waiting period easier. Over time, patience stops feeling like restraint and starts feeling like confidence. You're no longer afraid of missing out because you've seen enough cycles to know that opportunities repeat. But capital and emotional stability don't magically regenerate once they're damaged. I want to be clear about something before we go further. Patience does not mean passivity. It does not mean ignoring risk or refusing to adapt. It means acting deliberately at the right time for the right reasons. Some of the most decisive trades I've ever made were the result of long periods of watching and waiting. When the moment arrived, there was no hesitation, because patience had already done the work. As we approach the heart of this lesson, here's the question I want you to sit with when you rush into a trade. What are you really trying to escape? Boredom, fear, envy, self-doubt. The market doesn't care, but it will gladly take advantage of any answer that isn't rooted in process. Patience is the skill that keeps you from trading your emotions instead of the market, and it's the skill that separates those who burn out quickly from those who stay long enough to let experience actually work in their favor. And this is where everything starts to come together, because mastering patience isn't just about waiting longer. It's about building structures and habits that make waiting sustainable, repeatable, and emotionally survivable. And once you understand how to do that, patience stops being something you struggle with and starts becoming something you rely on, especially in those moments when the market feels alive and urgent, and you're standing there wondering whether to act now or wait just a little longer. Because that hesitation, that quiet pause right before action, is exactly where patience either collapses or reveals its true strength. And that's the moment we need to examine more closely as we move into the next part, where we talk about how to turn patience from an abstract virtue into a practical discipline you can actually execute when the pressure is real and the temptation to act is strongest. And you're right there, deciding whether to stay still or step in. And that decision is never theoretical. It's personal and immediate, and shaped by the habits you've built up to this point. And that is where we continue, and why the next part matters so much, because understanding patience is one thing, but learning how to live with it in real markets, when the noise is loud and the clock is ticking and the opportunity feels like it's slipping away, is something entirely different. And that is exactly where we pick up next, as we carry this thought forward and begin to talk about the concrete ways to train patience so that it holds when everything in you wants to move and prove something, and you instead choose to pause and let the market come to you rather than chasing it, just to escape the discomfort of waiting. And that is the bridge we're crossing as we go on and continue from here into the second part, where this lesson becomes practical and grounded and usable in your day-to-day trading life, and where patience stops being an idea and starts becoming a skill you can trust even when the market is doing everything it can to rush you and pull you out of alignment with your own rules. And that continuation begins right here as we move forward and explore how to build that kind of patience deliberately and sustainably over time, so that it becomes part of who you are as a trader, and not something you have to fight for every single day, when the screen lights up and the pressure starts to rise, and you feel that familiar urge to act before you've really earned the right to. And you pause right there, because this is the moment that defines whether patience is just a word to you or a real edge you can rely on. And that moment is where we continue next and build from this foundation into something you can actually use when it matters most, and the market is waiting for your response, and you're deciding whether to rush or to wait. And that choice, repeated over time, is what mastering the art of patience in trading is really about. And that is where we go next, as we continue without breaking the flow and carry this sentence forward into the next part, where the real work begins, and patience is no longer an abstract ideal, but a practiced discipline forged in real decisions under real pressure. And that is exactly where we pick up and continue as we move on to the second part and deepen this lesson into action by grounding it in repeatable habits that remove willpower from the equation and replace it with structure. Because patience collapses fastest when it depends on mood instead of method. Over time, I learned that the traders who appear calm are not calmer by nature. They've simply built systems that make impatience expensive and patience automatic. That is the real shift you're aiming for, not to feel patient, but to behave patiently, even when every emotional impulse is pushing you to act. The first habit that makes patience executable is limiting your decision windows. Constant exposure to price movement erodes patience, the way water erodes stone. If you are watching every tick, every fluctuation feels meaningful, even when it isn't. I learned to define when I am allowed to make decisions and when I am not. That might mean only evaluating trades at the close of a candle or only reviewing positions at specific times of day. This constraint does something powerful. It gives your nervous system time to settle. Most impulsive trades are taken, not because the setup changed, but because the trader kept staring long enough to invent a reason to act. The second habit is creating explicit no-trade rules. Most people focus only on when to trade, but patience grows when you are equally clear about when you will not participate. For me, that includes days after a large win or a painful loss, periods of unusually low liquidity, and markets driven purely by headline whiplash. These rules are not about fear. They are about respect for context. When you already know that certain conditions disqualify action, the internal debate disappears, and patience stops feeling like resistance and starts feeling like alignment. Another critical practice is separating preparation from execution. Impatient traders try to do both at the same time. They analyze, decide, and act in one emotional burst. Patient traders do their thinking when the market is quiet, and they're executing when the signal is clear. I spend far more time preparing scenarios than placing trades. That preparation makes waiting easier because you're not idle, you're ready. When price finally reaches your level, there's no rush, only recognition. You also have to train patience through deliberate inactivity. This sounds counterintuitive, but it's essential. Choose days where your only goal is to observe. No trades, no small positions, just watching. At first, this will feel uncomfortable, even pointless. Then, something interesting happens. You start seeing how many of your usual trades were born out of restlessness rather than necessity. This exercise rewires your relationship with action and teaches you that not trading is a valid, sometimes optimal decision. Patience is deeply connected to self-trust. If you don't trust yourself to act when the right moment comes, you'll act early just to relieve the tension of waiting. Building that trust takes consistency. Every time you follow your rules, especially when it means doing nothing, you reinforce the belief that you don't need to force outcomes. Over time, this trust becomes internal stability, and that stability is what allows patience to endure through long, dull stretches when nothing seems to be happening. One of the most important realizations I ever had was that the market does not reward effort. It rewards timing. You don't get paid for how long you stare at the screen or how badly you want a trade to work. You get paid for being positioned correctly when conditions align. Patience is what keeps you solvent until those conditions appear. Without it, even the best strategy degrades into random action. As this lesson comes to a close, I want to leave you with a reframing that changed my entire career. Patience is not the absence of action. It is the discipline to wait for your moment and the courage to let all other moments pass. Once you internalize that, the market stops feeling like something you have to chase and starts feeling like something you can engage with on your own terms. If this story helped you see patience differently, I encourage you to subscribe to the channel so you can continue learning through real market experiences rather than theory. And leave a comment sharing where impatience has cost you most in your own journey, because naming that pattern is often the first step toward breaking it and replacing it with the kind of steady discipline that allows you to stay in this game long enough for patience to become not just a skill, but a quiet source of confidence that carries you through every cycle the market has left to offer.